Welcome to this week's live ASX strategy session. Thanks for joining me. Great to have you with me for another discussion around the charts, around the ASX, the commodities. We've got the gold, copper, oil, and uranium. So plenty of interesting things to talk about today, with quite a bit of movement in some of those key areas. Now, as always, everything today is a general commentary only, doesn't take your personal situation into account. Having been through those things, I think we should jump straight into our charts for the week. So we'll start off with the ASX 200. Was the mid-July peak a notable peak? Well, to do this, I've got four charts to go through. Four charts I want to show you to help try and build an understanding around what could be happening, and in turn, we can then sort of map out some of the potential scenarios that could play out. So first up with the ASX 200. Now this is a really interesting juncture. We have a breakout from a 3-month trading range. We have an initial rally, and now we have the pullback. So as it stands, the pullback so far, it does look corrective. It's corrective the way it's structured. We've got this classic, you can see it here, we've got this classic zigzag structure to the price action. And we often get this sort of price action during consolidations or during corrections. And we get, the way the zigzag works, you get the initial decline, you get the rebound, and then you get a secondary sell-off, which is pretty much where we are now. And the other thing to note is that prices have pulled back to this breakout point. So we can see where prices broke higher from 3 weeks ago. Now we've pulled back to that breakout point. So this is another piece of that classic type of price action that we get around breakouts. And you get that retest of the breakout point. So I think from that perspective, this remains an overall bullish structure. But of course, a bullish structure doesn't guarantee that this breakout is going to stick. So I think the key level to watch over the maybe the next week or two, the key level to watch, I think it's Thursday's low. I think Thursday's low is a point that we need to pay attention to. And this also coincides with the 50-day moving average. So as always, you've got the 50-day and the 100-day moving averages. I think if we start to see prices come back down below Wednesday's low, back below the 50-day moving average, back towards the midpoint of this range, I think at that point we say, well, look, we've got a false break on our hands. Market's got a false break, hasn't been able to follow through and push higher from there. Now that hasn't happened yet by any stretch. It's just simply a possibility. It's simply being aware of the point to watch, to start to think, well, look, maybe that's happening. At this stage, as I say, structure remains bullish. It's also interesting to look at two dominant forces behind this rally that we're having in the ASX 200, and also the pullback. Dominant forces in the pullback to this market as well. So first up, I want to look at the financials. Now this is actually an ETF for the financials index, the BetaShares ASX 200 financials ETF. This is something, if you're a regular viewer, you've seen previously. This was one of the guides we had to the advance in the market, the rally getting underway when prices in the financials started to break higher in December. It's been tracking and trending nicely above those moving averages really since that time. It's been above the averages really mostly since November. So it's really been a strong trending market over that period, and the uptrend remains in place. And so this is one of the driving forces of the rally off the October low for the ASX 200. We're seeing a bit of sideways consolidation over the last couple of weeks, and that's healthy. It's healthy. It's healthy when you get a market that, look, you can see the whole way along, a market that rallies, consolidates, rallies, larger consolidations too. But generally you get rallies and consolidations, it's a healthy advancing market. That's what we're having now, a rally and yet another consolidation. It just works off the previous upward move and prepares the market for potentially the next leg higher. So this is pretty much a textbook upward trend, and it's been a case of letting profits run and staying with the trend. So this has been a positive influence on the market. Now, the other big influence on the market has been the miners. This hasn't been so positive, namely BHP. So BHP makes up about 9% of the ASX 200. Throw in Rio and Fortescue, and you've got about 13% of the ASX 200. And this section has not been going so well. In the last 2 weeks, BHP's broken down. It's broken support at around $40.50. Also broken out of this 4-month trading range, which we can see through here. We've got the declining moving averages. So it's been a section of the market which has really been struggling. You see this type of price action, the other big iron ore miners too. Also, again, across some of the commodity stocks, which we'll get to in a little bit. So we really have these two segments of the markets doing different things, and this is contributing. This weakness in BHP is contributing to this pullback we're getting in the ASX 200 at the moment. So this is where I think, and this is the fourth chart I want to show you. This is where it can be really helpful to look at the market on an equal weight basis. So let's look at that now. So this is the ASX 200 on an equal weight basis as opposed to the market capitalization index. And I think this helps us see the structure of the overall market, in this case, the 200 stocks, which makes up the ASX 200, and it takes out the distortions which you can get when you got those maybe 3 or 4 big cap stocks really pulling the market around. So this is interesting. Let me just compress this, give you a wider view. So the equal weight is not at an all-time high yet, like the ASX 200 is, but it's got this structure that continues to build. And looking at the rally off the October low, strong rally, broke above this resistance region, which comes in at around 1,940-ish, and you can see this stretches all the way back to the peaks back at COVID times, the pre-COVID peak, and it's been a structurally significant area through all that time. Broke above there in March. It's been trading sideways over the last 4 or so months since that breakout, and to me, this sideways movement, it really does set up a platform that can support higher levels. Still trading sideways, hasn't really broken higher yet. So I think when you look at the overall structure of the equal weight, I think this is a positive looking chart structure. And this period also looks highly corrective in that we had a strong trending period, and now we've got a period which is choppy, it's overlapping. It's a telltale signs of a corrective phase. And it's also been shallow. The pullback has been relatively shallow compared to the previous advance. So another sign of a corrective move. And you can see that classic zigzag in the price action. So in my experience, these structures typically resolve to the upside. So I think there's some really interesting things to look at as to how this market is currently setting itself up. Now, if you're getting some value for this, please hit that like button. Please leave a short comment. Just, hey, thanks to the video. Just tells YouTube you're watching. YouTube shows other people. It helps me a lot. So please do those things. Now, I want to show you the small ordinaries. That's the next part of this puzzle, which I think is really interesting. I've also got the commodities to go through, copper, gold, oil, and uranium, a couple of stocks to look at. Of course, so that wraps up the free section. So if you're not a strategy session member, there's a link below. Click that. Come on in. Costs you very little. Hopefully you get a whole heap of value for basically the price of a cup of coffee. So think about coming on in. Now, okay, so let's go over and check out the small ordinary.